Make it 50%. And we'll be announcing something very soon on pharmaceuticals.
So the support 25,331 on the downside. The resistance comes in at 25,669.
Well, I think, it's going to be a mixed bag. I'm certainly not rushing out to buy pharma names on this news.
The market opened absolutely flat.
High volatility, high beta stocks have done well. Momentum has been the better performer over the last couple of months.
Our pharma industry has a large footprint in the U.S. market. The generic industry has a large footprint.
Sensex is absolutely flat. Midcap slightly outperforming.
Midcap fund flows are up almost 33%.
Consolidation, that's definitely the name of the game right now. We're seeing Nifty absolutely flat right now.
And flat has been the story so far this week. And for the better part of today, you're with us on Closing Bell. And of course, as always, we're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. In a bit, we'll have Prashant and Rima join me as well. But it's been a flat day. The bias has been negative. And right now, we're looking at, once again, about a 30-point cut in the morning, which was the situation of the morning. We started lower. Then there was some attempt at a recovery, but it wasn't, it wasn't really sustained. And like I said, the index has spent the better part of the day around the flat line again. So let's take a look at where this slight Nifty weakness that we're seeing, where it's actually coming in from. If I look at it, the movers and shakers on the downside, about Tata Steel, HCL Tech, Hindalco, BEL, these are some of the names that are the biggest drags on the index today. And in terms of the contribution, you can see over there big stocks like ICICI Bank, Reliance, L&T. They're responsible for some of the weakness. Though we do have the FMCG names, which are still continuing. Actually, consumer and FMCG, that's been the only theme that's worked so far this week. And we're seeing some more evidence of that. HUL, for instance, is up and about. Some of the NBFCs are actually having not a bad afternoon. Look at Shriram Finance, 2% up. Bajaj Finance is up a little over 1% as well. So that's pretty much where the story is. Beyond that, it's all, like I said, it's all FMCG. There's Nestle, there's ITC, Asian Paints. So plenty of consumer names that are still finding traction. So yeah, that's the story. Midcap index has also been flat for the better part of the session. Right now, the midcap index is looking at a cut of about 0.2%. There you see, days low on the midcap index. Bank Nifty, absolutely flat. Not really getting any sense of direction from any of the indices, you would have to say. The advanced decline ratio, that's something that's a little better than yesterday, because we had, far more many declining stocks than advancing stocks yesterday at the same hour. Today, that situation so far held up. I mean, we had more advances than declines, but now the lines are coming very close to each other. So let's see what the last hour brings. We'll talk about the individual stock level action in the mid-cap arena. I'll just give you an example of that, a snippet of that. For instance, look at the EMS companies, names like Dixon, Sirma, Keynes. This whole pocket is quite active today because of a JP Morgan note. JP Morgan has initiated coverage in the sector, the EMS players. And these are some of the stocks that it likes. So there's some green over here. So therefore, news flow is driving stocks. And we'll talk about that as we go forward. But let's start with the strategies for the last hour. We have Mitesh with us as always. Mitesh, good afternoon. What do you make of the session today? Once again, very choppy, very range-bound, tight range. What's the understanding now for the indices?
Yeah. So, my sense is that, and I've been maintaining the stand that the Nifty is still in that big process of contraction. The hourly, 2-hourly, and the daily charts are all turning sideways in the sense that the indicators are flat, the averages are turning flat. So not much action is happening on the index. And I still believe that this is a process, the way the charts are shaping up. This process could possibly extend for next few days. So avoid the index. The counters have already defined 25,200 to about 25,650 is the range. And on the stock side, I have a buy on Container Corporation of India. That's something which has had a good move today. So buy here at the stock below 603 and look for a target of 630 to about 635. While a sell on Bank of India with a stop at about 117.3 for targets of around 100.
Hey, just hang on for a second. There's suddenly a bigger drop on the index. Pull up the Nifty intraday and pull up Reliance. Reliance single-handedly has pulled down the Nifty an additional 20 points or so in the last 10 minutes since we've spoken. Let's pull up the Nifty intraday and so that's the Nifty intraday. That's what happened. And then I was checking for what the reasons could be, and it's Reliance. Look at that stock. Pretty dramatic, that kind of a fall. 12 rupees suddenly gone in a matter of 10 minutes or so. Mitesh, any thoughts here? And once again, just the Nifty levels that you're tracking, and also Reliance, exact similar moves, Reliance dragging the index down.
In fact, Reliance is one, which has just dropped off in the last 30, 40 minutes. You look at the chart pattern, there's a negative rising wedge, and the stock will also roasted on the hourly charts. My sense is that 1510 to about 1500 is the first support area. If it breaks that, then we'll look at 1470. But in the short term, I think it's slightly headed negatively.
Okay. All right. Thanks for that, Mitesh. We've got Rima joining in as well now. Let's see if Rima can bring us some luck, because otherwise this has been such a lackluster market. But we don't know. I mean, let's see if the range breaks on the downside, Rima, because we've been in this tug of war right from the morning, looking a little tentative right now.
But at least for the first time, you're seeing a 40-point move in a span of few minutes, right? Like, when was the last time in the last 1 week that you saw even this kind of volatility?
It was
used to be par for the course.
Yesterday, after 3 o'clock, because we had the Sensex expiry. So we had a little bit of a flutter. Otherwise, it's almost like I keep using the word comatose. It's just not moving the market. Yeah.
It's a fairly dull market. But let's talk about individual stocks. That's where all the action is. IEX is surging after the government sources told CNBC-TV18 that market coupling reform is not in itself a big-ticket reform for the power sector. So a bit of a sigh of relief coming in from IEX. Abhimanyu is now joining in with the details.
Now, even as the report on market coupling is submitted by the Grid Controller of India to the CERC is under review, government sources have indicated that market coupling in itself is not that big ticket a reform to be looked at as far as the electricity market is concerned. Government sources pointed out that several recent and upcoming initiatives like electricity futures contracts will contribute to the power sector reforms in India. Now, the multi-commodity exchange is slated to launch its electricity futures contract tomorrow, even as government sources added that it can be looked at that further expansion in energy derivatives market may take place in future as part of power sector reforms which are still being effected by the government. Last month, CNBC-TV18 had reported on sources that Power Minister Manohar Lal Khattar may meet stakeholders to apprise them about the benefits of market coupling and also as and when market coupling takes place, it will happen via a broad bid and not through any internal bid. It remains to be seen how early market coupling is going to be undertaken by the union government, since the initiative has been pending since the past few years, even as there have been indications from the government side that it will be implemented soon, but there is no timeline which has been ascribed so far as implementation of market coupling is concerned.
Thank you, Abhimanyu, for joining in. Prakash, the flip-flop on IEX and if market coupling is coming or not coming continues. Before now, there seems to be at least positive news for IEX. You want to share your comments on IEX and generally what have you been doing in this, market? Have you been buying anything or just sitting out? I mean, what have you made of this consolidation?
So let me take the IEX thing out of the way. Very simply, this will keep on happening till market coupling gets a decisive, outlook. But what's important is that people have to accept the fact. Just 1 second. People have to accept the fact that you cannot have a market which is dominated by just one player. So either there will be multiple players coming in, or you'll probably see some sort of a rationalization of what sway IEX holds on this entire market. From that perspective, it's going to be good because the overall market gets a fillip to grow in scale, Rima, and that's always good for exchanges. In fact, we've not reached optimal scale, and that's exactly why it's hurting IEX every time something like this comes up or the thought of something like this comes up. So I would believe give it some time, let the market build up. There's a new power policy that's a blueprint that's been shared, and that involves a lot of play that exchanges will have going forward, a meaningful sense. So I would rely more on that from a secular growth perspective rather than these ifs and buts on market coupling. What have we been doing? We've been enjoying the weather. The market's been giving you wonderful opportunities to look at a lot of businesses to be evaluated. And there's this whole host of primary issuance which came through the IPO route in the last, let's say, 12 months, where some of these opportunities would start looking very promising once the levels The price equilibrium decides on optimal levels of these stocks. Great businesses which are now available, very new kind of businesses, market leaders in some cases. So, there's a whole host of opportunities if you look slightly harder, if you work slightly harder and look beyond the surface. So I would believe those are things that will promisingly come to the fore. We haven't allocated any fresh monies to defense, to cap codes, or to things like, which have been very good performers all this while YTD. But BFSI is probably one space which looks promising, at least in terms of the next 12 months of allocation. But no autos, no defense, no cap goods. So all these players stars of the last 1 year probably will take some backseat in terms of the portfolio churn that's evident with fresh monies coming.
Okay, so not running after the recent stars, so to speak. Prakash, we're going to ask you about one such pocket that's also been a recent star, and I'm talking about the EMS space. We'll just allow you to collect your thoughts because there's this JP Morgan note, right? So we want to, take it to Upasana first to tell our viewers what is JP Morgan's thesis. Now, these stocks have already done very well in the market. They've run a lot. But JP Morgan has now initiated coverage, and it likes several of these names, including Dixon and I think Sirma as well. But Upasana, you tell us more.
Well, certainly, JP Morgan has recognized this sector as one of the sunrise sector and hence has initiated coverage on this sector with a strong estimate in terms of revenue growth at a rate of 32% CAGR for the next 5 years. It says that this growth will be mainly led by rising electronics content in the products, Make in India push, and also realignment of global supply chains to India with China +1 strategy playing out. It has also recognized two new emerging opportunities such as OSAT and PCB, while export could be the next growth frontier is what they have highlighted. Now, coming to companies first, it has given an overweight rating to Sirma, Dixon Tech and even Keynes. The target price for Sirma, it sees around 800 per share, Dixon at 17,700 per share and Keynes at somewhere around 7,150 per share. While on the flip side, it has given a neutral rating on Amber and Cyan DLM and underweight rating on Avalon Tech. Now, target for Amber is 7,350 per share, Cyan 450, while Avalon at 650 per share. Now, let us look at the key growth triggers highlighted by the brokerage in terms of the three companies on which the brokerage is overweight on. Firstly, Sirma, it expects the export to pick up FY27 onwards, which will lead to a growth acceleration and even margin expansion is what the brokerage has highlighted. For Dixon, it believes that the company's key segment, that is the mobile segment, will drive growth until FY27, and beyond that, non-mobile segment is likely to pick up. Keynes, it sees the fastest growth at a CAGR of 46% from FY25 to FY28 and also targets revenue at $1 billion by FY28. Now, for Sirma, Cyan, DLM and Avalon Tech, the brokerage believes that exports could be the next frontier of growth over the long term. And overall, a 3x times 3-year rally and also demanding valuations is likely to see earnings upgrade and upcycle in this EMS space is what the brokerage has highlighted. So overall, JP Morgan remains positive on these companies and has highlighted it as one of the sunrise sectors.
Okay, all right, Upasana, got it. Thank you very much for that. So JP Morgan sees more triggers ahead, more growth opportunities, including probably the export markets in a bigger way. Prakash, now I don't think anyone can argue with that. The only issue is how much is already in the price, right? Because the stocks have had a great journey. Your thoughts?
Yeah, absolutely. You're right. See, while we do love to categorize these businesses as sunrise, it's no more 6:30, 7:30 in the morning. It's already past 10:30 for their growth as well. So, at some point we will realize that competitive intensity, market saturation, market segmentation will start playing out within the dynamics. And if export orientation is what the focus is or the trigger is, remember we are in such a world where overnight anything can happen. Export disruption or potential disruption is a reality. So I would really not bet too much on that. Yes, but there are performers like Keynes which are talking about super growth for the next 3 years, and some of them might make sense at lower valuations. There's a lot of hard work that the brokerage has put in terms of researching this space, and it's great to read, such incisive, insightful stuff. But whether to buy it at these levels is a question that individual investors will have to answer, given their risk appetite. But the valuations are definitely stretched. It's all relative. You've seen them at higher valuations. You probably find these valuations softer, but they probably deserve to be even much more softer. So I'm a value investor, and I would be willing to wait to buy into some of these, not because of the fact that things are changing dramatically, but things are the same. It's just the right valuation that will fetch you better rewards.
Prakash, you said that you've been enjoying the rains and also analyzing some of the recent IPOs.
Yes.
So which one caught your fancy? Which one did you invest in?
No, so we are still, as I said, when we started this exercise, we thought, we could identify some good names, allocate some money. But the surprising thing is there's so much more to kind of, choose out of. It's a whole buffet out there where, whether it's housing finance companies which have got listed, it's some of these engineering companies which have got listed. Some of the companies in the renewable space which are there. Quite a few of them are very small, so I would refrain from discussing those on air. But what I can tell you is just a case in point. It's again an illustration, no recommendation yet. But there's a company which got listed in February of this year, if I'm not mistaken. So that's very recent. And it's into self-loading concrete mixers. Now, SLCM, as they're called, is something which is, this is in use everywhere, wherever construction happens, whether it's roads, buildings, and that. And this company owns almost like 75% market share. It's a company by the name of Ajax Engineering. So, you will find some of these very interesting businesses. And as I said earlier, some of them also enjoy leadership position, very good ROCs, very good ratios. It's just whether, the growth is sustainable or not at these metrics. But having said that, again, post IPO, there's always a little bit of a time that you have to give to businesses for the price equilibrium to be derived. And once you're satisfied with the growth expectation and the pricing, then you probably have a good match. But I can leave you with this thought that the newer businesses that have got listed are what are attracting our attention in terms of there are companies which are into pharma but very specialized with dyes and color pigments. So this is not run-of-the-mill stuff. That you're not adding one more company which has so many Me Too plays already in the sector. So that's where we are talking about. Hopefully we'll be able to narrow down on sometime soon.
I remember this company, I think it had a market share of 75%. So clearly a leader in the segment.
These are those big cement mixers that you see going all over Bombay, around the roads. I mean, I'm not sure. Self-loading concrete mixers.
Yeah.
So these are regular cement mixers. Very, very curious. I mean, and since the stock came in at 600, since Prakash mentioned it, I started looking at it. IPO happened around 600. It's at 700 now.
Yeah, so that's what I'm saying. So even it made some high, I don't know when, sometime in the month of May, it's rationalized out beyond that. And remember, of course, it has a peculiar nature of its shareholding. There's still about 5% which promoters will have to dilute because they own 80%. So there's a bit of an overhang, and all those technicalities will be there. But what I'm, why I'm using this to illustrate is the kind of businesses that you have, which are very interesting, right? And there are some metal cutting machine tool manufacturers. Now that is so specialized to me that you'll be surprised. No defense project can do without these machines. And there are very few players who actually have an established track record to supply to these defense players. So there's going to be a host of newer businesses within the listed space. And I'm always excited, companies which come through the IPO route, give you a fair chance for everybody to buy it, at more or less the same levels and from a time perspective. So, it's kind of easy to identify businesses which you would like to go along the long term. But yeah, there's lots that's happening in this space.
Prakash, you like Ajax?
Yeah.
So we'll wait to of course deep dive into it, Prashant. But yeah, it is definitely something which caught our attention. It's fairly interesting.
And their market share, you said, the market share is 70%, across India?
Yes, that's what I'm saying. See, what happens is the the way these businesses have grown, and it's, by the way, it's not a very recent startup or some business that just come out last 8-10 years. They've been around for 30 years plus. So they understand the market, and there is, of course, the business growth is likely to come more from the after-sales service, the spares, and the hydraulic parts, and units that get fabricated and things like that. But once you have a USP, a moat, it becomes extremely difficult for others to kind of just come in and upset the apple cart. So you need visibility of growth, and that's what some of these businesses.
No, absolutely, but I must put out the caveat as well, because we've spent a very good long time talking about this company. But like Prakash is saying,
Prakash
he also
still not told us whether he likes it.
Yeah, he's saying he has to do more homework on this, right?
It's interesting, but is he interested? He's not told us.
he's saying he'll do a deeper dive, perhaps.
Prashant, I'm much lazier than most, so I take some longer time to decide. So
you're not lazier, Prakash. You're wiser. You're on Goa enjoying grains. That's wise. That's being wise.
Hopefully that's a coincidence.
Thank you very much for joining us, and appreciate you joining us with some of those insights. It is surely an interesting sort of environment. Lots of newer businesses making it to the market. We'll take a quick commercial break here. We're going to come back with Dinshaw Irani, who's joining us. Dinshaw, of course, is another wise man from Helios Mutual Fund on the other side. Dinshaw Irani is now joining us. He's CEO, Helios Mutual Fund. Dinshaw, great to have you with us here on the program. Thank you very much for joining us. Markets have quietened down significantly last 10 days, haven't they, Dinshaw? I mean, you look at the screen every day, it's kind of much quieter.
Prashant, thank you for having me on your show, and a very good afternoon to you and your viewers. Yeah, you're right. I mean, the markets have probably, I think they're in the consolidation phase. And frankly, I mean, our feel was that they will remain so. Basically, the call was that the quarter is not looking good. I mean, the June quarter. March was a disappointment. June looks another disappointing quarter. And unfortunately, it's going to be kicked off by the tech names. And I don't think the tech names are going to light up any fire in the market that way. And secondly, the trade deal, which has been a total overhang. I don't know what's going to happen here. Every day we hear that a couple of hours away, and it's like, what, couple of weeks that nothing has been announced. But I don't think that's also the trigger for the market. I think the trigger would be basically earnings growth. And probably the September quarter will be the start off of that season, I think. So mainly a consolidation phase.
So this consolidation will last till the next earnings season through Q1 because you're not expecting any fireworks. You think this range-bound move will continue? And it's only in the festive season that, we start getting some good news about growth and earnings.
Yeah, I won't be too surprised, but I'm sure the markets, like to discount a couple of months earlier. So once the news bites start coming out about how the corporates are doing and things like that, probably you'll see some kind of festivities coming back. But yeah, I totally agree. I think it's the festive season, which will the October to December quarter, when you'll really see the fun beginning, because even by then you'll see that the liquidity infusion by RBI, which will kick off sometime in September, will start having some impact, and probably you'll see people coming back into the markets and demand picking up. And yeah, I mean, I hope the party begins then.
Speaking of funding infusion and liquidity, at least mutual funds have reason to cheer. I'm sure you'll agree, Dinshaw. Just give me a second. I'll quickly run through the numbers in case someone missed the data today. I want to come back and talk to you about the capital markets theme. So here's the story, and the story is actually looking good. After a really disappointing May, when flows had dipped below 19,000 crores, mutual fund equity inflows for the month of June have recovered. There's about a 24% recovery. You can see that last bar is now at 23,500. Now, how is it split across mid-cap, large cap, small cap? The preference for investors is still small and mid-caps. That's the headline, because you can see the large cap funds there. They've recovered from May, but now compare this with how the flows are for mid and small. Mid-cap funds flows are about 3,750 crores. Small-cap fund flows are even better at 4,000 crores plus. So overall, there's a recovery coming in. But I do want to point out here that the data is telling, and it probably is telling us that the investors are becoming very smart. Because while equity funds have pulled in 23,500 odd crores, look at hybrid funds. They have also pulled in over 23,000 crores, 23,200 something to be more precise. So we're almost neck to neck in terms of pure equity flows and hybrid flows. And it's telling you that people are taking a balanced approach. They are looking at diversification. And the fact that a lot of the hybrid funds have very attractive tax structures as well now after the budget. This is making, this particular category fairly popular. The other good news is that the SIP picture is rock steady. In fact, monthly SIP flows are now above 27,000 crores. So that pillar is rising higher and higher. So looking fairly good. So now let's go back to Dinshaw, and he had that wide smile, right? Because in between, Dinshaw, I know this was becoming a bit of a concern that there's all this supply coming in, promoters are selling, QIPs are happening, MNCs are exiting, so who's going to buy? But your thoughts on not just the flows, but in general, I mean, the MF industry's appetite to come in and buy, average cash levels, and what we can expect given the paper supply, IPOs, etc., everything that's coming to the market.
So basically the supply and the flows, I mean, both it's a catch-22, right? I mean, if you have the supply, if you have the flows coming into the market, the supply is bound to come by because there are quite a few people waiting in the queue. You talk to any investment banker and he'll tell you he's got these crores of line just waiting to come and offload in the market. And that's a function of the kind of flows that are coming into the system. I mean, at some point in time, the FIs2 were buying, and obviously the DIs have been going on seeing flows. By the way, having said that, whenever you see a down day, you see a lot of flows coming into the mutual fund industry, and that's very peculiar. I mean, we are a part of this, so I can vouch for it that on a down day, my flows go up 2-3x as such. And that is really interesting because I think basically the retail guys are still there, quite a few guys sitting on the fence, waiting for a correction and just using that as an excuse to come back in. So I don't see that flow ebbing. In fact, with this, with the new tax thing going on, I mean, as in the new tax structure, I'm sure the savings also will be moving up for most of the investors. And that's why you're seeing these kind of healthy flows.
Okay. So that brings me to the wider question on overall capital market plays. Flows are fine, but then there are other issues that capital market players are dealing with, whether it's F&O regulation or Jane or Jack or whoever you're calling out these days. But your sense, again, stocks have done very well in the past, but is there a risk now in terms of further exposures to capital market stocks?
So if you see the exchanges, I think they're overdone. Frankly, I mean, the valuations are totally stretched. Same is the case with I suppose, the RTAs who are basically having a problem on the fee front. I mean, the renegotiations happening for these guys. And obviously the depositories, I think they're also the bulk of the move. I mean, as you saw, the 2 crore demat accounts becoming 22 odd crore demat accounts in like 5 years. I think that phase of growth is over for those guys also. So from here on, whom do you look at? Obviously, the guys who are raking in the money, which is the likes of us, which is the asset managers, or for that matter, the wealth managers. I think there's still a few left in play out here. And that's why we like these guys. And obviously the diversified brokerages and stuff like that were basically the gatekeepers to wealth. So I think those are the guys you want to look at in the capital market space and nothing beyond that.
Dinshu, some green shoots about consumer, coming back, the consumer story, or at least brokerages are betting that it's going to come, perhaps maybe by the festive season. So you are seeing some upgrades across some FMCG stocks in the paint industry. Where do you stand on consumer and the individual segments?
So my feel is that obviously FMCG and paints and all, I don't know. I mean, the valuations look pretty stretched out there. Even if growth comes in, what are we talking about? From mid-single digit to, say, high single digit kind of growth, at least in the FMCG space. Our feel is that with this kind of liquidity infusion that RBI has gone about doing, it's like fuel just being poured, and you just need a little spark for that fuel to light up. And that spark, I think, is mainly the consumer durables. I think that's where the real fun will be, the discretionary spends, rather. That's where the real fun will be. And I think that's the area one should look out for. And frankly, I mean, that is what you need, because if you get these kind of demand infusion in discretionary, you'll see that even the private sector capex will start kicking in, and that's a long-term party that we're talking about. So that's the only thing that we are looking at, and I think that's the way to go.
Any thoughts, Dinshu, on this? You must have seen the news around Vedanta. Any thoughts?
No thoughts. We don't own the stock. We've never owned the stock, and I don't want to comment on it.
Point taken. Hang in there. You may want to listen into this sort of conversation because the stock did react. I mean, it was down sharply intraday, about 7-8%. I think this is a short seller report which has come through, alleging all sorts of things. Vedanta, of course, has come through with a strong denial. It's calling that most of these allegations, etc., are completely, it's on your screen, baseless misinformation to discredit the group. So let's go across to Aditya Velekar, who's Senior Research Analyst, Axis Securities. Aditya, good to have you with us here. I've not looked at much of this in great detail. I'm sure you have. So just wanted your thoughts. What have you made of this report today? And of course, we put out Vedanta's response as well. What did you make of it?
Yeah, good afternoon. So difficult to make an immediate comment on this, but means I can speak from an operational perspective. So fundamentally, the company is strong and it is well placed, and it adds at the cusp of expansion. So there are various segments like aluminium segment, zinc segment, and then power segment. All these segments are the transformation is going to happen this and next fiscal, and we expect a good amount of earnings growth post this turnaround in these critical segments, especially in aluminium. Once they acquire the raw material integration, and then they expand the zinc smelting capacity and post their power plant commissioning. So all these things are operational, and that will surely drive the profitability of the company. Their free cash flows will increase. Also, their focus on deleveraging is also there. We have seen in last couple of years, they have deleveraged their parent Vedanta Resources debt by almost $2 to $3 billion. So currently it's at $5 billion, and they have a plan to further reduce it by $2 billion additional. So the focus on deleveraging is there. At Vedanta Limited also, their net debt is almost near around 53,000 crores, and they want to keep it under 1x net debt to EBITDA. So looking at all these things, the company has achieved a good turnaround, and the future also looks pretty operationally stable as such.
Aditya, just allow me a second here, and it's really important that you brought up the point on debt, because the central issue in this report that Viceroy has put out, I'm just quoting certain parts of it. I mean, they've used very, very strong language, so adding that caveat, and I'm just simply quoting, not even paraphrasing, saying that comparing the Vedanta parent, I mean, their issue is with VRL, Vedanta Resources, saying that, VRL is akin to a financial zombie or a parasite being kept alive by transfusions of cash from its subsidiary Vedanta. And they go on to say that, servicing the VRL debt is its own, a burden. Saying VRL's actions to meet its short-term obligations directly impair its creditors' long-term ability to recover their principal, a situation that resembles a Ponzi scheme. So very, very sharp language and harsh words over there. But to go back to understanding the debt interlinkages, Aditya, you said that Vedanta Resources' outstanding debt is $5 billion, right? Now, we don't know whether the listed entity, whether it's a guarantor to that debt in any way, what more can you tell us about the debt interlinkages between the listed entity and the parent?
So for parent, means you are right, means the parent doesn't have a direct source of cash to refund that debt. So it depends, the parent is dependent on the Vedanta Limited Indian listed company and Hindustan Zinc. So they get a brand fee, and the dividend upstreaming happens from both Hindustan Zinc and parent Vedanta Limited. So that is their only source of income to repay that debt. And I think they have done a restructuring activity on their outstanding debt and bonds. So that has given some comfort. But it is true that at resources level, there is no source of income to repay that debt directly. It is dependent on the performance of
the Indian listed entities.
Yes.
Yeah. Yes. So are there any immediate near-term repayment obligations? Because the thing is with Vedanta Resources, every now and then we have the situation where some bond payment is coming up and the market wonders whether it's happening or not happening. And then eventually it's gone through up until now. I mean, we haven't seen a major default. Are you aware of any? Yeah.
No, I don't think so. That scare of immediate bond default was there sometime last fiscal, but that they have managed to spread around the bond repayment schedule quite well now. I don't think the immediate liability is there or any maturity for bonds is coming. So bonds are slightly critical once they come for a repayment. Loan can be restructured, but what I recall is that their debt maturity is quite spreaded. And near-term challenge I don't foresee as such.
Okay, so that takes care of the debt issue and the debt questions that we had. One final point, let's remember this report has come at a time when Vedanta is going through a demerger, right? They're supposed to come up with different entities. Do you see any implications in the whole demerger exercise? You're overall positive on the stock, I guess, right?
Yeah, means operationally and fundamentally, the stock, the company has and the management has turned around the stock quite well, the company quite well. And operationally now it's at the cusp of execution. Means if they execute all these projects, the backward integration projects at aluminium, their power expansion and zinc expansion well, then definitely the cash flows should improve and this leverage issue should sort out in future. So that is the perspective. So we have to see from that angle. And as far as demerger is concerned, I guess there was some news that some issue was raised by Petroleum Ministry, but we have to wait and see. I think August 20th, they are once again, we will get some clarity what happens on that front. So demerger is one trigger where we can see some value unlocking, especially with respect to aluminium division. But yes, these are the issues which the stock has almost grappled with last several years, and it remains a kind of overhang on its performance. And so we have to wait and see. Means these issues will persist with the stock until we see a clear path where we can see that the deleveraging progress takes a front step and the debt at the parent level reduces substantially. So that is a key thing. Means now it's at $5 billion. If it goes down to 1 billion, 2 billion, then the comfort on the stock will increase further. Until that, all these issues will keep on, these question marks will be raised.
Okay. All right, Aditya. Thank you very much for the perspective. So let's see what the next couple of days bring, whether this issue simply stabilizes from here on. We'll take a break on that note. Thank you very much for joining in. And thanks to, of course, Dinshaw also for being with us today. Quick break. Come back on the other side. We'll get you all the buzz from dealing rooms and then some final trading calls with Mitesh. Welcome back. You're with us on Closing Bell. Well, let's take a look at all the buzz that we're gathering from the dealing rooms, because the last, half an hour at least has been a little volatile. We've got Nimesh joining in. Nimesh, suddenly from being a very flat day, again we're seeing some red. So I guess if there's any action, it's more from the bear side than the bull side today.
Not too sure whether it's a bull or a bear, but it's been lackluster. So that's been the trend for the last few days now. And now I think there is a bit of a joke as well in the dealing rooms that where is Jane Street? They are the ones who are bringing a lot of volatility, and that seems to be missing now. So from a trader perspective, it's not a great market, but a lot of individual stocks are buzzing. I'll add to those chatter as well, but largely it's been flat. Even the flows are quite muted is what I understand from larger institutions. On the negative side though, from FIs, at least in today's market, there is a bit of profit booking now in the PSU stocks as well as the real estate names. Real estate, on the back of that Nomura initiating on few companies, that has dragged a few of these real estate stocks in today's market. But there is a lot of chatter in the broader market, so to speak, and relatively, a lot of these mid-cap, small cap stocks have continued to outperform. and on decent volume. So the HNI activity seems to be quite there, but there is a lack of institutional participation. And of course, the traders are also feeling a sense of missing out on the Jane Street volumes.
No, absolutely. What about individual names, Nimesh?
Long
What's
list,
on your
Prashant. I mean, we call it a dull day, but there is a long list, at least from a charter point of view. So the first stock on my list is Fino Payments Bank. Big move on that stock, up 8% last I checked. The volumes too have also picked up, and the street is anticipating some corporate development very soon. For Fino Payments Bank, the most important trigger in the very near term would be the approval of the small finance bank license. That's something which the street is hoping for very soon. The second stock is Natco Pharma. Even that's been buzzing in trade and actually has relatively outperformed the pharma index, so to speak, in the last few days. And for Natco, there is a very strong buzz of an overseas acquisition coming very soon. So that's a trigger there. The third stock is Sammaan Capital. We've seen a bit of an uptake in the last 30 minutes of trade after a large block. Nearly 1 crore shares got changed hands. And after that, we've seen a bit of an uptake on that stock as well. I understand it was a clean out trade from a leading long only FII. So again, if there is a disclosure, it could be interesting as to who's bought in that block deal. So Sammaan is the third name on my list. The fourth stock is Laurus Labs. Again, within the pharma name, this is relatively outperformed in the last few weeks within the pharma names. And again, for Laurus Labs, I guess the whole excitement seems to be towards the export data, which can come in the next 1 or 2 days, and that seems to be very strong. And hence, you've seen an outperformance there. And the last name is VIP Industries. Again, for a very long time, there has been an anticipation or a buzz of an M&A deal happening very soon. Looks like that could be around the corner. I guess the street is sensing something in VIP very soon. So that's the reason why even VIP is buzzing in trade today.
Nimesh, the Fino payment news, right?
Yeah.
It's a regulatory thing, right?
It's a regulatory thing, yes. So I think the approval has to come from the regulator, that is RBI. For Fino Payments Bank, essentially, Prashant, it's a move from payments banking to a small finance bank license. So that's been pending. So I think the request went all the way in 23. So it's been 2 years since then that they've been waiting for this approval to come in. But for others like AU Small Finance Bank, it's going to be a migration from to a different kind of approval. So AU is something different, and Fino Payments is something different. For Fino Payment Banks, it's essentially the small finance bank, which they are waiting for a very long time.
And VIP, it's higher in anticipation of a large deal. When you say large deal, usually I add the word block in front of the deal.
But Prashant, which is why I've mentioned that block is unlikely, Prashant, because the trading window is closed for the promoters now. So at least in the block, the promoters can't sell. That's my understanding. But from a pure M&A point of view, it can still happen whether it's a closure of a trading window or not, because M&A can still happen. So I mean, and the street is anticipating an M&A deal, not like a block, but more of an M&A transaction in VIP Industries.
Interesting list, and longer the better. So Fino, Natco, Sammaan Capital, Laurus, VIP Industries. Thanks very much, Nimesh, for that. We'll come back to you for more. Well, let's for now take a quick stock of the market as well. We're down about 40 points, 25,480, and sideways too, slightly lower. Mitesh is back with us with what he wants you to do near term, buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
The STVT on Gas Authority with the stop at about 186.5 for targets of 182.5. ICICI Pru, that's a stock which has done very well in the last few hours, giving a breakout over here. So BTST here with the stop at 674, 673.5 and target of 695.
Thank you very much for that. But all eyes are going to be on the India-US trade deal. What's going to be announced, when, what will be the contours of it? Parikshit has picked up some updates. He joins us for more. Parikshit?
Well, we hear from our sources that the India-US trade deal is likely to happen. Talks have been positive for the last 1 month. However, there are some outstanding issues, some sticky points which are yet to be resolved. Having said that, earlier, the deadline for the reciprocal tariff was 9th of July, and both sides were trying to get a deal before that. And India was making more effort because it wanted to avoid the reciprocal tariffs. Now, with the deadline having been extended till the 1st of August, there could possibly be more talks behind the scenes. What we've been told right now is this. India, after extensive negotiations, finished everything, gave a deal to the United States. We proposed a fair and decent deal to the United States where we gave good amount of access to their heavy industries and also sought access for our labor-intensive sectors without compromising on agriculture and dairy. Now, President Trump has to sign off on the deal. He's been making positive statements, saying that we are very close to a trade deal with India, but eventually he has to take a decision whether this deal is now going to go through or not. So while a deal is imminent, the timeline is not clear, whether it's going to happen tomorrow or day after, or whether there will be more talks in the next few weeks. So all options are on the table. While the deal remains imminent, the timeline is something we cannot comment on, and sources in the Indian government also saying that the ball is in Washington's court. They have to take a call and decide whether they want to announce a deal right now or they want to indicate more talks with the Indian government.
Thank you very much for that. And while we all await the details of that, markets have been very, very quiet and consolidating. And plus, earnings season begins tomorrow. Anand Tandon is now joining in. Anand, we've seen a little bit of a volatility in the last 10 minutes, but markets are still down, give or take, just about 50-odd points today. What have you made of the way markets have been moving sideways over the last couple of days?
Obviously, the market is still fairly resilient because, you are at the price at which it is, and with the expectations of news flow in terms of results, etc., not necessarily being great. You are not really expecting to see an earnings growth of anything more, which is even remotely a two-digit growth. There aren't that many triggers for the market to move up. I think the nearest trigger that one can get is this trade deal. If it comes with somewhat positive, which means that relative to other countries, we don't get hit as much, then that may provide a bit of a rally.
Okay, let's talk about delivery. That's in focus after Motilal Oswal, I think, initiated coverage, sounding positive. Manglam joins in for more. Manglam?
Well, delivery is one of those stocks, which always has the street divided. Some don't like the fact that there is always liquidity pressure on the stock. Some of the other institution is looking to sell their stake. And the other part is looking at the strength of the network. Motilal Oswal is backing the strength of the network right now. They're saying that, the company has the strongest logistics network in the country. When it comes to reach, they have 19,000 pin codes, and they have across-the-board services, be it express parcel services, full truckload, part truckload, or even, supply chain solutions. So they have a target price of 480 on the stock. They've initiated with a buy. They believe that with the 20% market share that they have in express logistics, e-commerce logistics, the company can see revenue growth compounding at around 14% for the next 3 years. And the EBITDA as well as net profit will grow at a lot higher rate, 36% growth for the EBITDA, over 50% growth for the profitability. And given their valuation metric, they believe that at current levels, the stock is trading at close to 36 times EV to EBITDA when it comes to FY28 estimates. And that is a compelling opportunity for one to buy delivery. Having said that, remember, one of the bigger risks for delivery is that one of its larger clients, Meesho, has gone insourcing when it comes to logistics, and as a result of which, in the third-party logistics space, their market share stands to come down from over 40% now to around 20-25%. So that could be something that may put a lid on the gains, along with all the institutions that are ever so often looking to offload their stake in delivery. So we'll keep an eye out on those factors.
All right, Mangalam, thank you very much for that. We'll take a quick commercial break here. More market conversation on the other side.
welcome back. Well, we've got about 5 minutes to go before the day closes out. Let's take some final thoughts with Anand Tandon as well. Anand, we're talking about the earnings season starting. And obviously, the large cap IT services have really failed to impress or enthuse. But some of the mid-cap names like Coforge have done better. Would you look at some of these mid-cap plays, or would you be a contrarian and look at going back to large cap IT at all?
Well, I think IT services by itself, to me, doesn't hold too much attraction at this stage. No doubt, Coforge, the management commentary has been extremely bullish. They seem to be servicing Mars. While the rest of the markets, companies are unable to grow anywhere close to double digits, Coforge is guiding for very strong growth. And obviously, that is already in the price. So even if you were to believe that kind of growth will come through, it is not as if that is not already reflected in the price. I think you have to be looking at differentiated models rather than just IT services per se. To my mind, the time for high premium for IT services is not now.
Anand, what about EMS? JP Morgan is calling it a sunrise industry, saying that the revenue potential is for 30% plus CAGR growth till FY30. But it's not it's not a new theme. It's been well discovered. Valuations are high. Do you like any EMS stock?
Well, the part that has not yet been discovered is what we are seeing now, which is China holding back rare earth supplies. And, if you cannot even make a speaker, leave alone anything more complex than that because you don't have a supply, it can very well become like HAL where, you can make the body of the plane, but, it refuses to fly because it doesn't have an engine. So, we have to also look at the risks associated with this kind. In general terms, this is clearly a sector that can continue to grow. We have almost a very small fledgling industry in terms of anything to do with electronics. The whole ecosystem needs to be built. So it's an area that can absorb large amounts of capital and therefore has a long runway. But whether that runway has the potential will also depend on the kind of geopolitics that we live in. And I would argue that we are ignoring the risks already.
Ignoring the risks already. You said initially that this trade agreement perhaps is a bit of a trigger, Anand. Will it be a trigger? Or will it? Because what we've seen, it's not managed to move any of the other markets which have got these deals, right? For example, Vietnam or UK or even actually China for that matter supposedly has a deal, although no details are out. Go on.
So we are looking for good news, right, at this stage. So, for example, if we were to get a tariff on textiles, which is lower than Vietnam, I think you will see a sharp rally perhaps in some of the textile stocks, and perhaps justifiably so, because if our competitors are not going to get a kind of better position in terms of tariffs, and Bangladesh is not in any better position or Vietnam is not, then clearly we have some amount of edge. Will it be in high technology areas? I would very much doubt it. One hopes that India is still viewed as an ally for the US and someone that they want to support against some of the other smaller countries which could be used as gateways of exports of China. But otherwise, we are looking for items where we can actually service a larger market than we currently have. And that will mean that you have to service the US. So if you're not going to be able to service the US because of the tariffs, certainly it will be a negative. But broadly, I would imagine that, as I said, we are looking for positives. I don't think earnings is going to be it. Tariffs could be.
Earnings, of course. Sector after sector, I don't think there's very muted expectations. Nimesh was talking about Fino payment. I don't know if you heard some of that conversation earlier with that small finance bank license. Will that be a game changer if it comes through? Markets have been waiting for it for a long time.
Well, certainly, if anybody becomes a bank, you have now the license to take deposits. And with that, it means that if you are lending money to people who are not likely to pay you back, you will still not fail because RBI will step in and so will the taxpayers. So essentially, if you look at it, my belief remains that, microfinance in India is the equivalent of India's ninja loans. And the only reason why everything needs to go and become a bank is because that's the only way you can let those entities to survive on the medium to long term.
That is particularly harsh, huh? Anand, The way you put it with a straight face.
It's not, the moment you go below 96% recovery, and we do it regularly, right? People call it one-off. How many times are you going to call it one-off? From the time, if you look at the last 2 decades, there would be at least 6 incidences I can think of where, you would have got to a stage where your recoveries were less than 90%, which means those companies are bankrupt. But we still continue to survive, and that is why you see RBI forcing many of those companies to become small payment banks or merge with banks and so on. The largest was merged with IndusInd Bank, pretty much for the same reason. So
but to call a banking license is the license to lend money to people who won't pay you back and not get into trouble. That's a new definition.
Which have gone under, and yet the depositors continue to be paid.
Now, anything? Okay, fair enough. That's anything you've heard on VIP? Again, something that Nimesh was talking about, possible, deal and M&A.
Yeah,
again, it's been